Each year, AJ Financial Planning sends members of our team to regions of the world to seek out the smartest and brightest ideas globally. Just recently in July, our own Shaun Gilbert attended the inaugural annual CFA Asset Management Conference, which was held in the windy city of Chicago, USA. This global conference is attended by the who's who in the investing world. These fund managers oversee billions and billions of dollars globally, and a lot of them rub shoulders regularly with the top echelon of the captains of industry and government. This year, we have been pleased to send Shaun to attend this event to hear some of these experts in the industry speak and bring knowledge back to our team. Shaun, there was a lot of discussion about the US dollar and the currency at the conference. What were some of the ideas that came from this area?
Basically, all speakers and participants were pretty bullish on the US dollar against all the major world currencies, including the Aussie dollar. One of the speakers from JP Morgan showed some charts which were quite interesting, with the currencies at greatest risk due to the current commodity price fall. And it was no surprise to see that of the current commodity exporting countries, Australia had the second highest risk, only headed by Chile. And Australia definitely had the highest China risk, with 31.6% of Australia's exports going to China. That was far ahead of the second place Chile, with 23.6%. So this is another reason why China's slowdown will negatively affect the Australian economy. If we have any upcoming bad news from a global economic standpoint, we can only expect this to further boost the US dollar, as it is still seen as a safe haven for investors.
I believe the US Fed has been a major influence in the investment world. What was the thoughts around the rate rise?
There were some divergent thoughts about whether US rates would go up in September, December, or maybe not until 2016. There was some agreement though that the Fed doesn't want to shock the market, so really they're probably only going to raise rates when the market expectations are there. At the time of the conference in late July, the market was pricing in about a 20% chance of a rate hike, but as of 14th of August, that's now risen to 45%. If we see that figure get comfortably above 50% by the time of the next Fed meeting on 17th of September, I think there'll be a good chance of that first rate hike.
Finally, Shaun, what were the thoughts around the emerging markets area and of these markets moving forwards?
In the short to medium term, there was the expectation that the emerging market countries that depend on commodities will continue to struggle, as commodity prices are not expected to rise anytime soon. So this means countries in Latin America, such as Brazil and also Russia, don't have very favourable outlooks. Asia is likely to be the best performing region in the medium to long term, although the Chinese economy is expected to continue to slow over coming years. Even though official figures say Chinese growth is 7%, the experts had the view it's more like 4% or maybe less. The countries that are expected to outperform in Asia are India and the Philippines, who both have GDP growth above 6%, and also countries in Southeast Asia, such as Malaysia, Singapore, Thailand, Cambodia, and also Vietnam.
AJ Financial Planning firmly believes that it's important for our staff to sit amongst the cutting edge of the investment world. And we're proud to continually bring back knowledge from the brightest and smartest of the global investment community back to our clients. Like all investment ideas, however, it's important to seek professional guidance before actioning any one of the points that we've covered today in this interview. And we would, of course, recommend our friendly team of expert advisors here at AJ Financial Planning.